Good morning. It is Monday, January 26th, 2026. This is the DX Today AI Daily Brief. I'm your host. As the new year settles in, the artificial intelligence landscape is shifting from experimental pilots to hard economic realities. Today, we are tracking a major workforce restructuring at Amazon driven by automation, a critical supply chain development in South Korea involving NVIDIA, and new data from Microsoft Research quantifying exactly which white-collar roles are most exposed to the current wave of generative models. Let's examine the reports.
The race to supply the memory backbone for next-generation AI accelerators is tightening. Samsung Electronics has reportedly entered the final qualification phase with NVIDIA for its HBM4 AI memory chips. Industry sources indicate that Samsung is pushing to commence mass production as early as February. This aggressive timeline is a direct strategic move to challenge SK Hynix and Micron, who have dominated the early waves of high-bandwidth memory supply. If certified, this would alleviate a critical bottleneck in the global AI hardware supply chain. A new study released today by Microsoft Research offers a granular look at the labor market impacts of generative AI. The data identifies specific white-collar sectors, notably finance, legal services, and software development, as the most exposed to disruption. However, the researchers emphasize a nuance in the data. Exposure does not necessarily equate to replacement. The report suggests a rapid pivot toward human-AI collaboration models, where proficiency in managing AI agents is becoming a prerequisite for senior roles in these industries.
Data sovereignty remains the primary hurdle for enterprise AI adoption, a challenge Fujitsu aims to address with its latest platform launch. The Japanese tech giant has unveiled a private AI environment designed specifically for heavy industry and finance. This platform allows corporations to develop and operate generative models within a dedicated, isolated infrastructure. By removing the risk of data leakage to public models, Fujitsu is betting that highly regulated industries are ready to move from sandbox experiments to full-scale deployment.
South Korea is cementing its status as a bellwether for consumer AI adoption, following the global release of Gemini 3. Market data shows South Korea has surged to become Google's second-largest market for mobile AI revenue, trailing only the United States. Analysts point to the country's high smartphone penetration and robust 6G infrastructure as catalysts. The rapid uptake suggests that advanced mobile AI features are moving from novelty to daily utility faster in Asian markets than in parts of Europe.
In one of the most significant labor adjustments of the decade, reports indicate Amazon is preparing to reduce its corporate workforce by up to 30,000 roles. While the company cites various macroeconomic factors, internal memos suggest that AI-enabled efficiency gains in operations and middle management are a primary driver. The restructuring appears to target administrative and logistical planning roles, where algorithmic management has matured significantly over the last 12 months.
Taiwan's semiconductor manufacturing company is putting a concrete number on the industry's growth expectations. The foundry has announced plans to increase its capital expenditure to $56 billion for 2026. This massive outlay is specifically earmarked to expand capacity for AI-specific chip fabrication. TSMC executives describe the demand for advanced packaging and 2-nanometer processes as insatiable, effectively validating the semiconductor sector's long-term bullish outlook, despite broader economic uncertainties.
Meta Platforms has hit pause on its AI character interactions for a significant demographic. The company has temporarily disabled access to its AI personas for teenage users globally. This suspension comes as Meta reevaluates its safety protocols and develops new age-appropriate guardrails. The move reflects growing regulatory pressure and internal caution regarding how synthetic personalities interact with developing minds, prioritizing safety compliance over immediate engagement metrics.
Intel's recovery efforts are facing new headwinds. Despite robust order books, the company's stock dipped following executive warnings about supply chain bottlenecks. Intel is currently unable to source enough key components to assemble its latest AI accelerators at scale. While demand for their hardware remains high as an alternative to NVIDIA, these component shortages are constraining near-term revenue growth. highlighting the fragility of the semiconductor ecosystem beyond just the fabrication stage.
The integration of third-party large language models into the Apple ecosystem appears imminent. Leaks surfacing this week suggest Apple is finalizing a major overhaul of Siri, powered by Google's Gemini models. The update is expected to be unveiled as early as February. This partnership signals a pragmatic shift for Apple, leveraging Google's established infrastructure to rapidly upgrade Siri's conversational capabilities, while continuing to develop its proprietary on-device models in parallel.
A new economic index from Anthropic provides a reality check on the productivity boom. The report reveals that while generative AI is deployed widely, the most significant, tangible efficiency gains are currently concentrated almost exclusively in coding and technical tasks. For general administrative and creative work, the productivity delta remains statistically smaller. The findings suggest that while software engineering is being transformed, other sectors are still in an experimental phase regarding workflow integration.
The cost of autonomy is going up. Elon Musk has confirmed that the subscription price for Tesla's full self-driving feature will increase. The decision is being framed as a reflection of the system's increased value, following recent software updates that have reportedly improved intervention rates in urban environments. This pricing strategy reinforces Tesla's approach to FSD as an appreciating asset, even as regulatory scrutiny over autonomous driving claims remains high.
Finally, the financial markets are reacting to SoftBank's aggressive AI portfolio strategy. Analysts estimate that SoftBank's recent stake in OpenAI has already appreciated enough to deliver a potential $4.45 billion boost to the conglomerate's net asset value. This validation encourages Masayoshi Son's strategy of heavy capital injection into foundational AI companies, positioning SoftBank once again as a central kingmaker in the technology sector. That wraps up our briefing for today. As the industry recalibrates around these new efficiency metrics and hardware realities, we will continue to track the signal through the noise. For DX Today, stay curious.